Welcome back, Middle Age Grind. Today I'm going to go over my third installment and final installment in the life insurance series I've been running. And I had two. If you haven't seen them, go watch the previous two videos. And I had some emails from some subscribers about different questions, and there's six more points I wanted to bring up that I think is very important that everybody should know about life insurance. The first one I want to talk about is loans on a policy, okay? And these are going to be typically permanent, not term policy, although there are some term policies that may have cash value. And basically, you can take out loans on the equity while the policy's in force and use it from whatever you like, okay? But what that loan does, first off, I'll give you an example. Let's say you have a cash value in a policy and you take out $2,000 in a loan, right? What that does initially, right off the bat, is it reduces the death benefit by that amount. So if you take $2,000 loan, it takes $2,000 off the death benefit, okay? In most cases, you have the right to pay that loan back and rebuild that equity in the policy. But there will be interest charged. And I know, like with us, the interest on most loans are anywhere from 6 to 8%. So what you want to be careful is if you're taking a loan and not paying them back, that's okay. But that interest tends to build up, and you don't want to see your policy get in jeopardy by compounding interest on that loan, digging into some of that cash, and the premium you're paying not being enough to support that policy. That's what you want to be careful of. One of the things you can do is a lot of times is you can reduce the loan amount by basically wiping out the loan and permanently reducing the death benefit. May be an option for you there. But be careful taking loans out. I'm not a big fan of that. I tend to recommend people use that more as an emergency type fund and try to replenish that. Usually you can rebuild that, you can pay that loan back within your monthly premiums. The next one I wanted to talk about, and I actually had this happen to me one time. Accelerated death benefit is usually a rider on most life insurance policies, typically larger ones. What is that? Well, if you get diagnosed with a terminal illness, a lot of policies have provisions in there built in to where they will let you get a portion of that death benefit while you're still alive. Okay? Every company, I'm sure, is different, guys, on this, but I had a customer one time, a young guy, and he had cancer, and it was terminal. And he came in, we talked about it, reviewed things, and I let him know about this benefit, and he utilized it and got some money before he passed. And it's an advance on the death benefit, so you don't get anything extra, but he was able to do some things while he was still alive, wanted to take care of a few things, and he did. So look for that policy provision in your policy. This third point here, and this is a huge one, guys, updating your beneficiaries. Man, can I tell you, we've run into this before. Look, life insurance policies are taken out by someone, they put beneficiaries on there. Life policies could be 20, 30, 40 years old, whatever. It's your job as an insurer to make sure you're updating those beneficiaries. Now, there's primary, which that's who it's going to go to if something happens to you. And you can have multiple people on there. And then there's contingent, where that's if something happens to that first primary, then it'll go to the contingent beneficiary or beneficiaries. Just make sure you're doing this, guys. A lot of times, people get old, spouse dies, they still have spouse on there. And look, a lot of times, yeah, it's going to be a right of succession, who's the kids and that kind of thing, but it gets kind of murky. And we've had some issues in the past where people passed away and they got people listed on there. They really probably didn't know they already passed, and it just gets kind of murky, like I say, and you got to navigate through that after the fact. Do that ahead of time. And that, always look at that every year. You know, when you get your annual statement, it's going to list those beneficiaries on there. This is another one. Point number 4, keeping your policies in a safe place where loved ones can access them. You know, look, at your insurance agent office, or, you know, if you're dealing with a direct company, they're going to have copies of that. But a lot of time, beneficiaries don't know they're beneficiaries, nor the loved ones know where the policies are, how many they have. It's just a good idea if you have a safety deposit box, or you keep stuff in a safe place, just write everything down, guys, what you have. And you can have multiple policies. And we have people call all the time, yeah, we just checking. We know Dad was a customer here years ago, seeing if there are any life insurance policies here. And most of the time, you know, no, they're not. But sometimes they do find them. And don't make your loved ones have to search for them when you're gone. Just put everything in a safe place. Let people know. Point number 5, and this isn't directly to do with life insurance, but I want to explain this. The benefits of having a will, I think, are tremendous. It states out everything you want, your wishes. But I will say this. Life insurance policies, generally speaking, and I'm not an attorney or anything like that, but beneficiaries tend to trump wills. So that's why it's so important with that third point there, updating beneficiaries. Your will might say one thing, but an insurance company, generally speaking, they're going to go off of that legal document, which is the life insurance policy, on how to pay out that claim. So you want to kind of match up. Wills are great. They tell stuff. They solve a lot of problems. Try to match up your will to your beneficiary if all possible. That way it eliminates a lot of confusion. Another point too, I heard, and then Dave Ramsey talks about this all the time, and I bring him up a lot because, guys, what a great resource, Dave Ramsey Solutions. Don't leave people in the dark. Let people know your wishes, generally speaking, when you're alive. You know, don't keep things hidden and secret, and then, you know, families reading a will or beneficiaries and this one's left out. Like he says, take them off while you're alive. Don't leave it to the people handling this stuff when you're gone. Then they can't ask you questions anymore, and you leave it ambiguous and why he did this and why mom did that. Let people know when they're alive just how it's going to be, okay? It eliminates a lot of problems. And the 6th point, and this is, I'm going to have a couple more, and we cover the major insurances that we do here at State Farm: auto, homeowners, and life insurance. There's going to be some follow-up videos on, I'm going to do a long-term care, disability insurance, cancer insurance, which we do not sell, but I have an Aflac policy. But managing this on a budget. Everything we're talking about now, guys, is risk, and we're managing risk is what we're doing. And you have to do this within your budget. And life insurance usually is not as expensive as most people think. Now, as you get older, it gets more expensive. You have health issues, it definitely gets not only expensive, but sometimes unobtainable. Making some of these plans when you're young, like I talked about before. I have a hybrid. I have a lot of term insurance, and I have a few permanent plans that I've already paid up, and I feel good about that. I'm not regretting having a $25,000 paid up life insurance policy. I could have put it in the market and all of this. I'm doing that too, guys. This isn't, to me, an all or none type of thing. But these are some questions and these some good points that I think people, had some subscribers bring up to me. And I wanted to kind of give you the last installment here of the life insurance series in the middle age grind. And we'll see you next time.